Hello, friends, and welcome back to Market Shares. I'm your host, Tony Blodgett, and today I have another one of those awesome interviews. I'm really excited about this one. This is actually one of my colleagues, someone that I've worked with for over a decade. We're going to be talking to Chad Church. He is the SVP of NAF Leads. And man, this guy does a lot for our organization. But the reason I wanted to interview him here on Market Shares is because he kind of has a unique role within the industry. I've never worked with someone like Chad because I've never worked at a company that also has a call center. And I think there's a lot that we can learn from the insights that he gathers through all of his time buying and distributing leads and working with more of a call center kind of focused department. But he also now, over the last number of years, spills over into retail and supports the merger of our consumer direct and retail division. So this is going to be a very cool conversation. Chad Church, welcome to Market Shares.
Hey, Tony, thanks. Glad to be here.
Yeah, no, this is going to be fun. Well, let's just kick off real quick with a little bit of your background. Since I've been here, it's been over 11 years. You've pretty much been in a similar type of role. But have you always been in the call center space, or, were you in other parts of the mortgage industry? Just give us a little background on you to kick us off.
I've been in the business now 35 years, and the only thing I know is loans and how to deliver pizzas.
Okay.
That's all I know how to do. So my backup plan, I guess, if this loan thing doesn't work out, is getting back and delivering pizzas. But my passion in growing up has been on the sales side, being a loan officer. So I had the opportunity to close a lot of loans, learn how to package loans and product, and then I've gone on to other positions, work a lot with legal compliance because there's a ton of that, especially today, a lot with our lead buys, marketing. So I've had a pretty good career in a lot of different key roles and spaces that have really helped me out, especially where we're at today with the online consumers, with consumer direct, with retail, and being able to put on a loan officer hat, I think, is also really equally important.
Yeah, 100%. So how long have you been at New American Funding for?
About 14 years.
Okay. So you got me by a few years. So because New American Funding, a lot of people don't know this, but, started as a call center. There was no retail until 2011, 2012, somewhere in that neighborhood. So when you started, was it all call center focused at the time?
It was. The company was kind of going from doing a lot of direct mail, FHA streamlines. And they hadn't really been in the internet space before. So I'd say I interviewed Rick, see if we'd be a good fit, and came over and we started bringing in internet leads, and they started doing conventional loans. And, here we are today doing pretty much everything.
Got it. That makes a lot of sense. Yeah, I joined in 2014, and it was just a couple of years after starting retail. And, for me, all I know is retail. So it's fascinating to learn a little bit about the call center business. I want to ask you a couple questions about that business. And I want to start with the most obvious one that is in my mind, because I've brought this up recently in a few different conversations that I've been in. I've mentioned it on the podcast that when I look at the national statistics for mortgage applications, it suggests, 2 weeks ago that 60% of mortgage applications right now are refinance transactions. And I look at our retail book, and there's more refis now than there was probably 6 months ago, but it's definitely not 50 or 60% of the business. So I have to imagine that business is happening somewhere. So is it happening in call centers more often? Are you guys seeing similar numbers to that? Or maybe are you even skewed the other way where you're more refinance than purchase in a market like this? I'm just curious what you're experiencing right now.
Both. We're doing a lot of refi cash out programs right now for a lot of different people that either they're sitting on really good rates, have a need for cash, they want to tap into their equity. and people aren't coming in for a rate and term refi right now. It's basically debt consolidation or doing a lot of improvements to their home. Looking at either going with a line of credit, a second, or just combining it all into a first mortgage. And that's the skill of the loan officers here at New American as far as on the contact center side. They're trained to provide the customer with the best product that fits their needs based off of that phone call that's coming in. Plus our own book of business. We do a good job at the retention side, staying in front of the customers and working with them. And a lot of our loan officers get people that repeat clients. And that's because I think of the trust they built on the first loan.
Yeah. I think a lot of retail loan officers, when they hear that half of the applications happening in the United States are refinances, I think they just don't believe it because they're not experiencing that. Now, obviously at a call center, you have a lot of these leads that you're actually in charge of buying all the leads for the company, is my understanding. So obviously you have clients that are looking to do some sort of refinancing. But what do you think it is, or do you have an opinion, like psychologically, what's going on with loan officers that feel like because they don't think it's a refinance market, maybe because interest rates are still, pretty elevated. But yet we see call centers and other places where the consumer's dying to tap into that equity they've built over the last couple of years. So do you have any thoughts on what's kind of holding back the loan officer from reaching out to their clients and checking with them? Because my guess is some of the loans that you guys are doing right now, where a borrower has gone online and reached out about a debt consolidation refinance, was probably a missed opportunity sitting in someone's database who did their loan and never thought to call them because they didn't think that there was an opportunity to refinance them. What's your thoughts on that?
My thoughts, I think a lot of retail loan officers are looking at their book of business thinking, I'm not going to take this guy out of a 3% rate and put him into a 5.5 or a 6%. I think that's where a lot of it stems from. But that doesn't mean that guy doesn't need cash. That doesn't mean that guy doesn't have a need. Everybody should be reaching out to their clients. Because if you're not reaching out to your own clients on the retail side, they're getting direct mail, they're hearing it on the internet, they're seeing advertising for it. And if they have a need or a want for cash, they're going to contact somebody. You want them to contact you. But I think it's just getting out of that mindset that it's okay to talk to a person about their options because they need cash.
Yeah.
And I think there's that reluctance. That would be my opinion on the retail side is, oh, I don't want to call the guy. He's already got a great rate. Well, it doesn't mean he doesn't need, cash for some reason.
Yeah. I mean, I personally think it's highly valuable to have a relationship with your client. And just because you reach out to them doesn't mean you need to sell them a mortgage on this phone call. But checking in with them on how their situation is, what's going on, reminding them that you're a resource. I mean, that alone, if they are in need, they're going to share that with you. And you don't have to feel like you're making a sales call. You're just making a relationship building call that may turn into a transaction if it's what's in the borrower's best interest. I think that's a mindset shift that people need to have. And just, we say these are our clients for life, but then we never talk to them during their life. Like I heard that said like 20 years ago at a conference, and it stuck with me. It's like, you can't just call them when the opportunity feels like it's right. You need to talk to them all the time. And what you'll realize is that people have things that they need at different times in their life because everyone's life experience is different. What we do know is people have more equity in their homes today than they've ever had in the history of the United States. Yep. And so chances are, if they're in a bind, you could help them since we're in the business of helping people tap into the equity that they have in their home, right? So yep. Just kind of makes sense to me. One thing I've been fascinated about with, and sorry, I got so many questions about the consumer direct channel because even though we work at the same company, like I don't really get involved in that side of the business, but it's fascinating to me. One of the things that I thought was really interesting, over the last 3.5 years or so, as interest rates went up, like when I think of a call center, I think like they just do refinance business. They're very opportunistic. They come into the market when there's refinances there. They go away when their business isn't there. But you guys have made a very successful pivot and I know it's not just you, there's a whole team on the consumer direct side, but you're in charge of acquiring the leads and whatnot. So I know you're really involved in this, but you guys were very successful, I felt like, at pivoting into a purchase focused call center. So can you maybe speak a little bit to, how you did that, and even the leads? Like, my understanding, and you correct me if I'm wrong, but that a lot of call centers don't even want to purchase leads because they don't know how to deal with them, or they're not used to those converting very well. So that might have actually opened up some opportunity for you to purchase some of those at a more reasonable cost, because the demand wasn't there, as long as you've set up your teams to be able to handle that purchase business. Let's talk about that for a minute, because I think it's fascinating.
Man, I can go on. I don't know how much time we got on this subject, but I can definitely.
Yeah, well, we don't have a ton, but
we built the purchase side with not only amazing people, but with purpose. So first off, we had the vision of Rick, our CEO, that put his money where his mouth was. And the CD side, the consumer direct side, wasn't making money for the first couple of years, spending a ton of money. And the decision was made to keep them separate. So you got your guys doing refis, and you've got your guys that specialize in the purchase. Because if a refi doesn't close, it's okay. You just roll into the next month. But like a purchase, you got closing dates, you got domino effect, you got moving companies outside, you got people living in hotels waiting for their keys. So that's probably the first thing, is to set ourselves up for success, is just separated it and kept with it. And during the time when the rates were super low and all the refi guys were making all this money, Rick ponied up and paid the guys more to keep them in the seats so that they could learn and become proficient on the purchase side. And a lot of companies on the call center side don't get into purchase because of the tail. Could be 6 months, 8 months, a year before you see any return. And again, that takes vision, and quite frankly, takes balls. I mean, that's what Rick did. He put his money where his mouth is, and he understands the long-term play. And a lot of companies don't have that cash. They just don't have the ability to let it play out over that period of time. So I think that, and then COVID. Let's talk about that. Prior to that, I think before we got on, I gave you a stat, was prior to COVID, internet people, or people that came to us online, 65% would come in and said, no, they don't have a realtor. After COVID, you have 78%. COVID, I think, launched people to trusting buying and doing things transaction over the internet. It used to be they'd go jump in a real estate agent's car, maybe get one house, and then that realtor would refer them, they get approved. But with the internet and information, people are going online, but 78% of the people now don't have a real estate agent. And that's another thing that I think that we did really well in the contact center, is the biggest obstacle was retail kicks ass. And by that, our loan officers would get somebody approved, they'd be working with them, and then last minute they'd go in over the weekend, see a property, and the realtor go, oh, hey, I want you to get pre-approved with my buddy Tony. And the realtor had so much control, they'd rip it away, that it was really frustrating, because we had all these pre-approvals, we had people that wanted to buy homes, and then the real estate agents. So we started NAF Homes, which is a sister company, and that allows us to refer clients that don't have a real estate agent over to NAF Homes. And there's on the retail side, or on the CD side, retail can use it too if they want to. And if they use NAF Homes, we will give them a lender credit up to about $2,500. And that's different, because a lot of the call centers that have that type of setup do it as a profit center. They take the money, put it in their pocket. What we do is we give them a lender credit. And guess what? It makes that loan officer being able to offer something of value up front on call one. They can give them a lower interest rate, which is a lower payment, given them lender credit.
Yeah, and I'm glad you brought up NAF Homes, because that's where I was going to go next. But I want to add a point of clarity about NAF Homes, which is that NAF Homes doesn't have a bunch of real estate agents working for them. These are real estate agents who work at your local real estate companies that we've partnered up with. As a matter of fact, we are pushing out tens of thousands of leads to local real estate agents through NAF Homes and, in conjunction with our NAF Leads program, right? So
Yep.
yeah, 100%.
And retail joins in. Retail sometimes, they're cautious because if you refer your realtor into this network and then some guy in a call center screws up a deal, it's the local guy that gets beat up over it. So we know that, and the brand is important. So we can't screw up on purchases in the call center because we know that we have a local loan officer that could be at risk, reputational risk. So that's something that we put a lot of time, effort, and thought into to not letting that happen where we disrupt the market. But we do have retail agents that will put their clients into NAF or their realtors into NAF homes. Those realtors get the benefit of the business, and that just really gives that loan officer locally that street credit for giving this extra revenue.
Right.
And again, it takes trust of that loan officer to kind of, because they're not in control of the loan, somebody else is. But again, I think we've done a good job, and Consumer Direct's got some great leadership. They jump in, they help, they make sure that we're not screwing up.
Yeah. So Chad, when there's been a lot of talk about like the Rockets and the Redfins and, this merger and consolidation of real estate and mortgage and stuff in our industry. I don't think a lot of people realize that at NAF, we've had NAF Homes for years, right? We've been controlling that lead end to end with this process kind of quietly and behind the scenes, but it's for good reason. Do you know the statistic when you have a pre-approved buyer where you don't control the real estate relationship versus when you do, what the close ratio is on those?
It's dismal.
Yeah.
It is. If you have a customer that doesn't have a real estate agent when they come in and they're not willing to let you refer to NAF Homes, the chances of that closing are very slim to none. It just every single time. So either the real estate agent matters in the transaction. So if they don't have a real estate agent, you've got to get them lined up with a real estate agent. That's critical. Because if you don't, that local real estate agent is going to rip that person away and make sure that they use their local guy. Happens all the time.
Well, I think this is good knowledge to have, right? I mean, the good news is, I guess, if you're a retail loan officer, you can know that your realtor does have some influence to steal that deal away, even if your client, or that client is out in the ether getting a loan from an online lender. But it's also good to know, from your perspective, why you're winning over other call centers. The advent of NAF Homes and our partner realtors that we work with, like, they understand that part of the role in getting the leads from us is to help keep that relationship with us through the process while they're representing that buyer through their real estate transaction. And my guess is it's helped you guys drastically turn the corner and be one of the preeminent purchase focused call centers in the country, or at least the division that handles the purchase business. It's got to be one of the best out there. And it's interesting how Rick and you guys had that foresight to realize, like, if we can control that part of it, we can really increase our close ratio. But without that part of it, we could spend all the money we want on these purchase leads, and we're not going to ever capture the percentage that we need to make this, lucrative. So it really is an interesting combo, and I applaud your guys' vision on that, and Rick's vision on that, and investment in that to make it work. It's just a fascinating thing to understand, is that the real estate agent at the end of the day still has a lot of influence. And if everyone's focused on how do I get the lead first, well, that's not the end of the story. Like, you got to get the lead first, and then you have to also direct the rest of the steps along the way. Otherwise, you end up losing that lead at some point in the process, is kind of what it sounds like you're saying.
Yeah, think mousetraps. The amount of mousetraps that are out there online to capture somebody that is thinking about buying a home and then becoming a lead that gets sold. is incredible. If somebody's even looking for insurance online, that ends up becoming an insurance lead and a mortgage lead because he's looking for insurance on a home. It's like it becomes a lead. So it's so hard to procure the client, keep the client, get them approved, and then stay with them. That nurturing, and that's where systems like Bonzo that we use works really well because it has the touch up, the touch points that don't sound automated, that are real, coming from a text or an email. But staying in front of that guy or gal sometimes a year is critical. Also having resources to help them with their credit. Retail's great at that. Retail, they get somebody who's interested in buying a home, they're going to work with that guy and stick with them and be like their coach, be their cheerleader, and help them with their credit. Call centers, it's usually about the now. Like they're looking for the guys that can close right now because they want that fast transaction. And I think that does a little bit of a disservice to the consumer that wants to buy. And then they're kind of left, they don't know where to go. I think that's another thing that we did that was really smart is the alignment with UQual. Have a place to provide the customers with a company that can offer that service and sticks with them, does that coaching and cheerleading, and then has the client or refers the client back once they become credit ready. So it's a lot of different things that you got to shut down along the way because they're going to become a lead somewhere else. And the nice thing about retail, when they do get a referral from a realtor, that trust is coming from that realtor or directly that loan officer, and that's gold. That is so hard to break into. And then sometimes it does come down to rate for the retail guy, but that commitment or that trust from that realtor to that consumer, it's absolutely is huge, and we still see it. It happens all the time.
Yeah. Let's talk a little bit about how the evolution has happened at NAF. And we're not the only company that does this, but I think it is pretty unique. And I think we do it more successfully than most, which is marrying together and this is not like merging together of consumer direct and retail, but it's taking the consumer direct division and partnering with some of our retail loan officers that, are interested in receiving leads, albeit at a lower compensation structure, right? Because there's a lot of costs involved in acquiring these leads. But maybe speak to what led to the idea of what was originally called Local Buyer Connect, which was taking purchase leads and referring them to retail loan officers that are local to the market where that person is purchasing. Mm-hmm. We started that years ago, and I know you were heavily involved with that. So can you speak to kind of the logic behind that strategy? And then maybe we can talk a little bit about how, it's evolved into what it is today.
Yeah, let's back up here for a second to explain something about our consumer direct and retail. I think what makes New American Funding completely unique is most companies that have that, it's an us against them. I mean, it really is. And, you hear it from new retail guys coming in that the last company they're at, their retail or their consumer direct was ripping out their book. We're so aligned here between consumer direct. Ray, who runs consumer direct, is with you guys, is with Pat. That is totally unique. You don't hear of that symbiotic relationship. And I think that's key. A good example is a customer will come in and they'll talk to somebody, a loan officer, but then they really want to talk to somebody local. No problem. We refer them over to the local guy. And I think that goes back to our culture here about putting the customer first. You got to put the customer above everything else. And there's certain down payments that consumer direct's not good at doing because they're very unique to that very specific, it could be down at the city or town level, right? That a guy sitting in an office in Arizona helping a guy out in Florida, it'd probably be better served on a specialty product with a local guy. One-time close, we get a lot of that. Those get referred out to the retail 203Ks. So I think that being able to give those and also provide a service to the customer is also very valuable to the retail side. And we give those up all day long.
Yeah. Well, I got to say, this is one thing where, even when I joined New American Funding, I was very concerned about the fact that there was a consumer direct division of the company that I was going to join. I mean, as a leader in the retail sales space, it was a concern. And you're actually the one guy that I usually reach out to if there's any sort of a conflict, what I would call channel crossover.
Yep.
And I think I'd be lying to say that it never happens. Of course it happens, things happen sometimes, right? Like for instance, your realtor refers refers the local loan officer and the borrower didn't write down their name. So they go online and they try to find them and they find themselves in the call center. Like we've had that happen before.
Yep.
And what I've been you said this when we first met and you're like, look, we're gonna default, like we're gonna do the research, and if that's their lead, like we'll default and we'll hand it over, like no problem, like we're gonna support you guys. And even Ray, who's the EVP of the consumer direct division, he's like, look, we're only successful because of the reputation that, not only, but we're a big part of our success is your success in the market. Like we're not competing with you, we're here to support you. And that's always been the words, but I've seen it followed up with actions for over the last decade that I've been here. And I've always appreciated that. And I recruit loan officers often who are like, I've worked at companies that have call centers, and you're right. We do not experience that sort of conflict. And when we do, it's always talked about and resolved. And I feel like you guys are always defaulting to support the retail guys, at least that's been my experience. And I probably dealt with it as much as anybody being in the role that I'm in within the organization. And, it definitely helps lower the fear, if you will, that, that people can have about working at a company that has multiple channels like that. And I give you guys a lot of credit for supporting that, but you're right. It is also supported by our culture. And you also always have the data. Like one thing about Chad, when I call Chad, he's like, dude, I can pull the call, I can pull the conversation, I'll pull the email. Like we know exactly how we're communicating with people. And, and we'll give you the facts, and facts matter, so it's been very cool.
Channel, Tony, just real quick on channel crossover. That's one of the things that I've actually just kept in control of, because that conflict being solved has to be solved quickly and also has to be solved honestly. You cannot BS a retail agent. And if it's something that we need to own because we screwed up, we own it and we tell them, and this is what we did, and then this is how we're going to fix it so it doesn't happen again. That happens, but that makes us human. And I think that's really important to have that relationship. So when we do go to them and say, no, that's not what happened, we have that trust, because they also know that we're not bullshitting them. They know that we're going to give them the real deal. And we do see it happen. And we do research it. And it's important that everybody knows what's going, because sometimes we might be taking a loan that consumer direct guy has already got pre-approved, but he was referred by his realtor, and that's the procuring cause. So we got to knock on that guy's door and go, hey, I'm really sorry. We got to take this away from you, and we got to give it to this person. So we got to think about, both sides, but we do the person right over here. We'll pay them a little bit to make them at least not feel like they worked for free. But it's not consumer direct's client, it's the retail's client. And then sometimes we get people that come to us online, and we've been working with them for 3 weeks, and our loan officer sends out the pre-approval letter. The realtor sees New American Funding, so they call up their buddy. Then the buddy calls in and says, hey, you took my client. And we're like, whoa, stop, time out. And then we do the research and we say, this is what happened. And guess what? Hey, loan officer, we're going to give this to the local guy, because that relationship you have to preserve with that loan officer. It's like the builder business. We protect that here at New American Funding like crazy, because some of these guys and gals have taken years to get into a builder. It takes one deal to screw it up. So we don't want to be the cause of screwing up a relationship.
Yeah.
So that's why I think it really matters and it's important.
Well, and almost every time that you do the research, you do find that the borrower did reach out. They did go online.
Mhm.
They were doing some sort of research that the retail loan officer wasn't aware of, and it's always good to back that up with facts. But like you said, you almost always, from what I've seen, it defers. It goes back to the retail loan officer, and you figure out, if there's already been a consumer direct loan officer involved, how to, compensate them or make it right with them. But it is interesting that consumer behavior. It's back to what you talked about before, just that shift in consumer behavior. Look, as a retail loan officer, you might think that your client is your client, but they're out there, they're filling out lead forms. They're filling out information on different websites, getting calls from different people, shopping you, even if, loosely, I'm shocked sometimes at how much information people will give to a random website about themselves that then becomes a lead that gets purchased by different call centers around the country. And now they have, a bunch of different quote options in front of them. And here the whole time you thought they were loyal to you. And some of the research that you've done, Chad, has shown me, really opened my eyes to what consumers are willing to do in the evening on their laptop doing research. It's fascinating.
Yeah.
What will happen. Well, let's go back to this, what I think is the real, evolution that's happened. This started as a fear of retail versus consumer direct, and now it's become like a support mechanism. There's a lot of benefit that we have if we choose to participate in it, for our retail guys that want access to some of those leads. And it felt to me like early on, what you were seeing in the data is that as great as your purchase, consumer direct guys are, which I know that they're very good, there's something to be said when it comes to conversion when they're working with someone local to their market. Was that kind of the driver initially of, looking at that more closely?
Yep. It was a hypothesis that we came up with. It came true. I think it's just that face-to-face interaction, and the sports teams or the little leagues or what pizza place to go to. So it's a completely different relationship. You're building a relationship, right? And I think that's where there is that separation between like a consumer direct. Yes, they build a relationship, but not like retail. Retail really is relationship focused, and consumer direct typically is transactional focused. That's really, and being able to let a consumer work with somebody that is in their area, almost doubled, I think, the conversions that we were seeing on that. So it made sense. And that's kind of how Local Buyer Connect was born. And we have about 200 retail loan officers that we're sending leads to on a daily basis. We're doing live transfers. We have packages, where we're pulling in, bringing in the documentation, sending those out. And it's a grind. Hey, I called the guy, didn't call me back. Yeah, he ghosted you. That happens because people have opportunity to go somewhere else. And I think that's also where we've done a good job, because we have the consumer direct background to help the retail agents kind of cross a little bit of that, because it's different. Again, a referral from the realtor, you got that trust. There's not a lot of trust when somebody is behind a computer online, and not everybody wants to get on the phone. Not everybody wants to meet face to face. Some people want to text, some people want to email. So you just have to be willing to navigate and communicate in the manner in which the customer wants to communicate. And we see it all the time. In fact, I should give you a good number, about 30 a day. We have about 30 clients a day that come in, that came in online, has nothing to do with the retail agent. And our system goes, oh, wait, this is a client of this realtor agent. We actually reject the lead and send an email to the retail agent and say, hey, your guy's out shopping. He's filling out forms online. Could be like Lending Tree, for example. And that's going out to like everybody and their brother. He's getting lit up like a Christmas tree. So we send out that shopping alert to him. And that's about 30 a day. I mean, in most companies, again, they don't do that. That takes thought. We have humans sometimes that have to look at the leads because they'll say they're referred by Sally Jones. Well, we have to look up who Sally Jones is. Oh, that's a realtor. Oh, this realtor's done business with Tony. This is actually Tony's client, and get it over to the right person.
Yeah, no, that's fascinating. Well, when you're talking about the success of the NAF Leads program, and the relationship that loan officers build, I hope that that's a reminder to retail loan officers how important building relationship with your clients is. I mean, here Chad is sharing with you that we saw double the success in close ratios simply by taking what was already a online focused consumer, meaning somebody who went online and filled out a lead form of some sort, right? So they're a lead, they're an internet lead. But when you hand them over to a retail loan officer who's relationship focused, the close ratio goes up significantly. So don't think that the relationship building aspect of what you do as a retail loan officer doesn't have value. And to me, it's one of the big separators of retail loan officers and consumer direct. And look, this is not intended to be like an us against them. It's just there's different ways of doing mortgage origination. And there's very successful people in every channel of it. But if you're a retail loan officer, you got to own and love the fact that you're building relationships with your clients. And that is part of your unique value proposition, and own that. And then think about, how do I make that even a bigger part of what I do? And, you mentioned COVID earlier. I feel like since COVID, retail loan officers have started acting more like consumer direct loan officers, meaning they interact more via email and over the computer and so on and so forth, because you're right, the consumer's behavior has changed and we've adapted to it. But be careful. Be careful not to do that too much. And because if you do, you lose what makes us unique, in that we build relationships, we're a local presence, so on and so forth. So if we lose that, is there a big difference? That's what I would ask you. So that's something to think about. And it's a big reminder. I mean, it was a unique part of why this program worked, but it's something that a lot of loan officers, I don't feel like, embrace like they used to. And I think they got to be careful there.
I've seen so many retail loan officers here, though, like grow their book of business through NAF Leads. And this isn't to pitch NAF Leads, but it is about the relationship where, unfortunately for me, they don't necessarily take leads anymore because they were able to build referrals, repeat business. What we see a lot of times when somebody comes in with a realtor already and it goes to the retail agent, they crush it. And by crushing it, they close on time. They communicate, they do what they do best with that real estate agent. And guess what? That real estate agent isn't loyal to anybody. And all of a sudden, Tony did a great job. They start referring deals to Tony. We see that all the time. So it doesn't matter where you're getting an online borrower or your own borrower, repeat business, referrals, and you have to ask for it. You need to remind people that what you do, like you said, reach out. Maybe they don't know that you do refinance. They think you're just do purchases. They don't know unless you tell them that. Or maybe their kid's going to school in a different state and they don't know that you can help them maybe in a different state with getting financing. So they end up going with a different company, not because they didn't like you, but that's like, I think your job as a loan officer is educate them, let them know that you are here. And who gets a call from their loan officer? Think about it, man. Like everybody says, oh, I got my doctor, I got my attorney, but who says, oh, I got my loan officer? That's not a common thing. But the guys that are successful, man, their clients are loyal. I mean, they are very loyal. And I think that's great to see. I think that's part of the success, that the guys that do have success are getting that referral business. Real quick, one of the guys down in San Diego last year has been tough as far as the market. Last year, he did 57 loans, and 16 of them were referrals from either real estate agents that he met through the program or from repeat clients. And he's a president's counsel. So he works, he follows up, he's got a plan. And that's equally important. Have that plan, have that follow up. And if you're not going to do a refi and have somebody in your company that you can partner with to do the refi. So you can refer that client to somebody. We have some retail agents that all they do is they do a lot of builder business, and they don't do the refi. So we've partnered them up with loan officers that do refis. So when the client calls in, oh yeah, hey, let me have Scott take care of you. They refer it over. Scott's part of the ABC group. And again, it's a service. It's putting the client first, and you don't want your client going online. I know, because that's what we do. We got mousetraps all over the place. And that's what we do. And that's what they're designed to do, is get people to come into your funnel and become a lead. And you don't want your customer becoming a lead. You just don't.
Yeah.
It's bad
Yeah.
enough that you had to fight credit triggers, right?
Well, luckily those will be gone soon. Those will be gone soon.
Well, everybody knows how bad and horrific that was, right? Well, have your client go online and fill out a form at a place that sends it out to 5 different companies. They get blown up. I mean, it's insane.
And then they pull their credit, and then they become a trigger lead on top of all that, right?
Yeah.
Well,
It's insane.
So part of what I heard you talking about is what I would consider just like old school, like sales 101, like sales, knowledge. And, you and I spoke a few weeks ago, and you shared with me, I guess this playbook that you put together, the mindset of an amazing loan officer. And I thought it was really cool. So I want to talk to you about that, because I've always been, I'm kind of a sales fundamental kind of a guy. Like, I grew up, when I came up through this industry, late 90s, early 2000s, I went to a lot of sales training, guys like, Tommy Hopkins or, whoever else. Like, there's a lot of, Zig Ziglar, like a lot of people who talked about like the fundamentals of selling. And I've always felt like it was important. I mean, even like you just said, asking for the transaction, like, people may think, oh yeah, Tony's my guy, I love him. But if someone else asks them in that moment, they might forget about me, because people want to say yes to you. People want to, they have a hard time saying no, especially if you ask it the right way, or especially if you do it in person, they'll be like, yeah, okay, yeah, no, absolutely, I'll give you a call. So it's so important. But I read through this mindset of an amazing loan officer. I just want to talk to you about that as we come towards the end here of this conversation. I have to imagine, as a person who just read through this, what was your motivation for writing this? And I'm wondering if you feel a little bit like I feel, which is that over the last, I would say almost decade, I'd say the last 3 years, it's become apparent how important the fundamentals are in our industry. But for the decade before that, we were in a decreasing interest rate environment, and you could have pretty good success in the mortgage industry without a whole lot of training or skills around sales, because there was so much business and rates kept dropping. And then it culminated all with COVID, and rates really, dropped to the floor. I feel like we have this whole cohort possibly of loan officers who've had okay success, or maybe are even struggling right now. And part of it is because they just don't have those sales fundamentals. Is that what kind of led you to put together this playbook, is kind of bringing back like what I would think are the obvious things that loan officers need to do, but, and what was the motivation for you to kind of put this together? What are you seeing in the sales skills of loan officers today?
Gosh, that's like such an open question. I think to answer it this way would be, what I've found and what I've seen with the loan officers here that are retail that we give leads to. Some of the comments, somebody ghosted them. It's because of our rates. It's not because of the rates. It's you didn't dig, you didn't probe, you didn't overcome the objection. There's an objection there. There's a pain point. And I think we all need to be reminded and trained and coached one way or the other. It's like, I tell people, use a CRM. I don't care what CRM you use. You've got to be using a CRM. People are using yellow sticky still. It blows my mind. They're using Excel spreadsheets because that's how they've always done it. But CRMs today can task management, the follow-up, the way that you can, again, stay organized. But I see a lot of great loan officers that are so used to that realtor, that trust, right? That's not there with the online consumer. So you've got to, in a very short amount of time, to build trust and to build rapport. And I'm not talking about, oh, what kind of little dog you have barking in the background. I'm not talking about Fluffy the dog, but it's really understanding the fundamentals and really is being a great listener. We listen to a lot of calls, and it's like the guy bought already, and you kept talking and you talked him out of it, but he bought from you 5 minutes ago, but you kept talking and you puked all over him, and then guess what? You don't have the deal now. So you have one mouth and two ears.
Yeah.
You got to be, again, a great listener. I can go through like the persistence, the integrity, the follow up, the follow through. But if I had to say one thing right now to anybody, it's so hard not to talk and just be a great listener. People need that. People want to be heard. And you can't be distracted when you're talking to somebody. People hear that, even if you're on the phone with them. You've been on the phone with somebody before and you know they're blowing you off, right? Uh-huh. Okay, yeah, all right. Oh, yeah, yeah, yeah. Uh-huh, uh-huh. Like if you're sounding like that, what do you think that makes the person feel like on the other side? So listening to them, I think, is for me kind of the foundation that you got to build it off of. But to, I guess, get back to your question, because now I'm going to pontificate and I'll start monologuing and talking about sales. I think it's fundamental, just like a professional athlete. You got to practice. Like being a loan officer is a craft. You have your continuing education, right? New products are coming out. You have to be mindful of what these new products are. Why not sales? Why not perfect your sales? And just one little thing can make a big difference in did you close that deal or did you not close that deal?
Yeah. Well, I think you brought up a really good point, I guess, that I didn't consider. I mean, I do think that there is a lack of sales training in our industry, and a lot of loan officers, even on the retail side, I would say there's just not the same mentorship that used to happen because people don't go into the office as often. They're not having as many in-person sales meetings, a lot of the areas where we learn from. But you're right. There's a huge advantage that referral-based loan officers have, which is that client typically comes to them already being told by somebody, this is the guy you should call. I trust him. I believe in him. I've worked with him in the past, right? Like if you're getting leads from realtors, you already have a pretty big advantage in that conversation over working with online leads. And so this playbook helps loan officers who might be dealing with leads, maybe even a seasoned loan officer who's always worked with real estate agents is now getting access to leads. And there is some things you might want to consider doing different in your approach to build that rapport that's not already built in when a deal is referred to you. I mean, is that a fair assessment as well of kind of what you were thinking when you put this together?
Yeah, and I think, again, back to the mouse traps. Customers think about buying a house. They're doing other things. They might be looking up moving companies, right? What is it going to cost to move? And they're doing some research. There's going to be a mousetrap there that's going to try to get the guy to go through some kind of mortgage funnel. And so don't think that your clients aren't going online. And it's not that they're cheating on you. Sometimes they don't even know that they're filling out a form and they get all the way through it because they're just looking for information. I think as it evolves, you're going to see more and more people do business and want to transact online. We're seeing it. And that goes back to the whole communicate by text. That's what I love about retail. They use their cell phone. That's such an advantage over contact center, because if that client has a question at Nervous Nelly at 7 o'clock or 10 o'clock on Thursday night, she can text a retail agent, and 9 times out of 10, that retail agent is going to text them back. That's a service that, again, not everybody knows that. So that goes back into why use you, Tony. That goes back into the value that you have, the credibility that you have, and being able to give your elevator speech to a customer in a short amount of time, on why do business with you. Think about it. Ask yourself, why do business with you, Tony? Oh, well, we got really good rates and we close on time. Like that's just the norm. You gotta be a little bit different and say things that are going to at least be memorable to build value and to keep that trust with you.
Yeah. Well, I'm looking forward to this. I know you got finishing touches to put on this, but I don't know if you're planning on publishing this at some point, but I think it's really cool. One of the most interesting things, I want to jump to the end of it here, is you talk about the different type of people that you might be selling to, and you reference visual, auditory, and kind of
Kinesthetic.
there you go. And I hadn't heard it put that way before, but you lay out in here like words that they might use, like, if they use the word like, yeah, I hear you, they might be more auditory, or I see what you're saying, they might be more visual, and there's some clues that you might be able to get about how people learn, how people will digest information, and then pivoting your sales strategy a little bit to align with what works best for them. And I think you were saying in here that people that are visual, they're more the fast paced, like go, 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 give me the information, like your type A kind of personality. To me, it kind of feels like that all kind of lines up. And, the more visual, the more auditory people, maybe you're leaving voice text for them, where they can listen to your voice, listen to what you're saying. Maybe like if you're a mortgage coach user, you're doing a video where they got audio, where you're talking through their options for them. And then you got your kinesthetic. Am I saying that right?
Yep.
People that want to see it, they want to feel it, they want to visually review it. They're a little slower to make decisions, but give them a graph, give them the charts, give them the data to research. This seems very basic, but I love the way that you laid it out here. And it's something that I think all salespeople should think about, is we all know there's different types of personalities, but I love just these three and how you gave some, key words to look for, some key behaviors, some key attributes, how to sell to them. I think it's really, really smart.
It's brain language, and it's NLP, neuro linguistic programming. It's been around for a really long time, but when you're doing phone sales, even if you're face to face with somebody, it's about building rapport, and it's understanding how that person across the table from you, how they intake information and how their brain processes it. We say it all the time. Hey, you're not listening to me. You're not hearing what I'm saying. That's probably somebody that's auditory, or we're not seeing eye to eye. I mean, that's probably somebody that's visual. So, we had a programmer, and everybody, I spoke Tim, great guy, but a lot of people, he was so visual. So I'd go talk to him, and I knew he was visual. So I'm putting pictures in front of him, I'm drawing things, and that's how we communicated, because he was just so visual. And that could be the same thing with a client. When you're talking to a client, if they are visual, they need to see it. You need to get it to them in writing. You need to spell it out for them. And little things like, okay, great, I'll see you tomorrow, versus, oh, I'll talk to you tomorrow. I mean, there's all these different, little clues, but that way, when you're speaking their language, they're hearing what you're saying, and you're just building rapport. It's like 3 times, the studies show, like 3 times as fast when you're connecting with somebody on the same brain language. But it's not rocket science. It just takes time. It's funny when you shake somebody's hand and they turn it, they're dominant, right? There's all kinds of things that NLP teaches you, and it's something I've learned a long time ago, and it was probably one of the best things. I use it in life, believe it or not. It's instinctual for me. When I was doing loans, I had VKA on the top of my papers. Talk to the person, they're visual. So next time I talk to them, I'm using visual words. Next time, kinesthetics, touch, feel. We'll run into a situation, we're offering a client a lower interest rate, but they want to go with their local guy or their bank because they want to go in and see them. They want to sit down with them. So they're willing, because they're kinesthetic, touch, feel. I'm going to be the loan officer that's going to handle your loan. That's a touch word. I'll hold your hand and guide you through the process. That's a different close on a kinesthetic than somebody who is visual or somebody who's auditory. So yeah, it's brain language. It's very powerful.
Yeah. I've heard of NLP. I have not studied it much. I didn't know that came from that. I guess you do mention it in in the playbook here. But anyway, this is really cool, Chad. I love what you put together. Are you planning on publishing this at some point, you think? Or what are you thinking? I think you should. I think it's really cool.
Cool.
Maybe if you do and you get it all tidied up, we'll share it here on Market Shares. But look, for our audience, I hope you enjoyed this conversation because Chad, you're awesome. There's so much more we probably could have talked about today. But I hope that just getting a peek into, like I said before, there's lots of way of doing mortgage origination, and Chad works really closely with consumer direct guys. I think it's fascinating as much as I've always been a retail guy. I'm passionate about retail and, for so long, I just wanted to put blinders on to what even happened in the consumer direct world. But I think we're in a day and age where you can't do that anymore. I think even understanding the consumer behavior and why it blows me away when I think about how many leads these guys purchase, which I'm not even going to get into those numbers, but they would blow your mind away, the amount of leads. And just the fact that those leads are available tells me you have consumers out there blindly putting their information into websites that become these leads that people purchase. And look, I get there's funnels and there's tricks and there's mouse traps, as you said, but that has to tell you something alone about where consumers are at today and their willingness to start their journey online, give their information online. And we have to really, as retail guys, hone our skills and differentiate ourselves. And the best way to do that is to understand, the consumer behavior. And I got to say, what you guys do on your side of the business is you really take that to a science. I mean, the margin of consumer direct is, it's a fine line when you're spending money on leads and obviously you have competitive interest rates and you have all the things you got to weigh. You got to get the numbers right. And so it's fascinating. It's a much more data and I would say scientific approach to our industry. But I think if you are a well-rounded loan officer, you should understand all of it and do know that whether we like it or not, more and more consumers, especially the younger generation, will start their journey online when it comes to their mortgage. And as Chad said, 78% of them will start that journey before they have a real estate agent. So how do you tap into that segment of the business? Or do you, and then hope that whoever gets that mortgage lead is not also able to direct them to a real estate agent, because if they are, you're not going to be able to get that lead from that real estate agent in the future. So we got to think about those things, and we got to future proof our business, our relationship business from those sort of things, or at least, if nothing else, be aware of them. Chad, thanks for being willing to come on Market Shares and share a little bit of your story. And this was a great conversation. I appreciate you.
Thanks.
To our audience, thank you for tuning in as always. And if you like this, give a comment, give a like.
No, smash the like, man. Come on, smash it. Give Tony some love. He needs it. He's getting down and dirty if he's bringing guys like me on the call, man. He's really reaching deep. Give him some love.
Oh, I love that, Chad. We do put out a new episode every single Friday. So if you don't want to miss one of the episodes, if you subscribe to the channel, you'll get notified every single week, Friday, 10 a.m. Pacific time, you'll get another episode. And more than anything, share this with somebody. If you thought this was an interesting conversation, which I don't know how you couldn't, let someone in the industry know about Market Shares, and I would greatly appreciate that. Until next time, take care. Chad, I'll see you soon, my friend, and take care, everybody.